Hello, it's Adil bringing you a review of the FTSE 100 from an intermarket analysis perspective and see exactly where this FTSE 100 is going. Okay, interesting times indeed. Last week, very volatile, very hard for me to read the market. The currencies were diverging from the equity market. The equity market was gyrating. I mean, we had stories with regards to Mr. Zhu. Then we had stories regarding hedge fund liquidating. Then we've had stories with regards to the Swiss bank, central bank. So there's been so many different stories. The rumor mill has been very busy. We've had iPhone concerns with regards to the Bendgate and iOS 8, and so on and so forth. So there's been a lot of rumors, a lot of noise in the market this week, and hence the reason why it's been very volatile for us to understand and interpret exactly where this price action wants to take us. Okay, so yes, so very poor week for me last week, minus 210 points. So I'll confess to that from the outset. Probably not the best forecasting accuracy with regards to last week, but let's see exactly what's happening. I mean, if you have a bad week, then what you should really do, in essence, is actually work harder and observe all your variables again, and obviously look at it from an impartial, unbiased perspective. Okay, and actually start to challenge your current thought process and theory with regards to the market. Okay, so what's the most relevant? Okay, so from a economical point of view. Okay, so fundamentals first of all. Okay, Mr. Carney obviously came in and he gave his perspective on the markets, and he was sounding quite hawkish. Okay, although even though he sounded hawkish and mentioned that rates would be going up sooner rather than later. Okay, even though he did that, the strength of the dollar, which obviously, as we know at present, is probably the one that's the most confusing. Okay, especially with regards to the FOMC and the stance that the FOMC and the Fed members are taking at present, which is dollar bullish. And as you can see, the dollar itself has rallied. So this in itself presents a conundrum, because obviously with the fact that the dollar rallying and moving higher, then obviously the stock market should certainly be selling off quite substantially compared to what they are at present. Okay, so whether or not the equity market is lagging with the dollar obviously going higher, although it is testing double top and broken the previous high at present. So tapering concerns, obviously tapering brought forward, taper interest rates obviously brought forward in the US, and that's why the dollar itself is obviously rallying. That in itself should cause a sell-off in the US stock markets, which in itself should cause a sell-off in the UK markets, which it has to a certain extent. But the euphoria over the Scottish vote, I expected that to hold, and I expected the FTSE obviously to propel higher, and that's not been the case either from the outset. So hence the reason why confusing. Okay, so obviously Mr. Carney comes in quite hawkish, and obviously that exacerbates the sell-off to a large extent. But having said that, this week we've had Tesco profit warning. We've had the pharmaceuticals under pressure due to the tax inversion. So there's been quite a few fundamental currents at play. Okay, so the Scottish vote obviously and the euphoria regarding that obviously has been set aside, and it's all about geopolitical concerns. Obviously with the war in Iraq as well now, with ISIS attacking, and the UK government obviously passing the law or voting in favour of obviously attacking ISIS and suppressing those nutheads, those imbeciles, morons, what else can I call them? Okay, just fanatical, extremist Wahhabi movement that's funded by the petrodollars in Saudi Arabia, which obviously is quietly supported by the US, which really is a shame, to be honest with you. It's an absolute shame. The US should be ashamed of themselves by supporting a fanatical extremist regime such as Saudi Arabia. Okay. So it's just a shame. Okay, as soon as those fanatics in Saudi Arabia go, them and their stupid little silly kingdom, the better it will be for the world, and there'll be peace hopefully. Okay, so obviously Ukraine-Russia situation has remained quiet. The Palestine-Israel situation, thank God, has remained quiet as well. So really the concern has been with regards to ISIS and the extremist propaganda machine. Really, I mean, it's a product of the what can I say? It's a little small group of bandits that need to be quashed and neutralized very quickly. Okay, and hopefully the world will be a better place. Right, so the dollar obviously has certainly rallied and moved higher. Okay, so that's basically what we're focusing on. Okay, so that's basically the backdrop. Mr. Carney hawkish. Sterling still fails to rally though. So if you look at sterling, let me just bring up a chart of sterling. 1 second. Here we go. Okay, so we have a chart of sterling, and bring up a daily chart of sterling, show you in perspective. So Mr. Carney obviously has failed to, even though with regards to his hawkish stance, still failed to propel the sterling higher, given the fact that the US dollar index obviously reigns supreme right now, and as you can see, a potential here for a H&S reversal, which obviously will, after putting in a lower high, certainly is the case. But with Mr. Carney hawkish, I can't see sterling going down considerably, especially given the fact that the US dollar, as you can see, is at double top resistance now. So that's certainly worth keeping an eye out for. And as you already know, the FTSE and the sterling has an inverse relationship. So as you can see, sterling lower and the FTSE obviously higher. Okay, on the Friday. So that'll be interesting to observe. Okay, so with regards to the FTSE 100, let's go back to FTSE 100 now. Okay, so what are the concerns that are going to be plaguing the FTSE going into next week? Okay, yes, Tesco concerns, retailers will certainly be under pressure. So if I bring up the chart of the retail sector, as we all know, although the retail sector has had a potential a prop higher because of Mr. Ashley's bid, or Ashley's ongoing potential investment with regards to Tesco, and the fact that it's potentially worth £3 a share and it seems to be undervalued. So a lot of, it could be a possibility of a buyout, etc. Whatever the theory of thought process regarding that is that he's obviously supporting the shares from that perspective. Although his little adventure with regards to dividends hasn't obviously paid dividends, that's down quite considerably. So, okay, so with regards to the retail sector, as you can see, lower lows and lower highs. We breached this key support around here. We've come back, we're retesting it. We're making a potential lower high again. So pivot high, pivot low, we're into the 50% retracement, and obviously down we go. Therefore, this certainly remains bearish. Okay, so the retail sector still remains relatively bearish, and as you can see, lower lows, lower highs, and we're certainly looking for the markets to continue propelling lower with regards to the FTSE 100. Okay, then you had the pharmaceutical sector. Pharmaceutical sector, as you can see, the market has obviously sold off because of the tax inversion concerns. And obviously that sent FTSE into a, as you can see, massive gap down here. That's the day the FTSE went into a tailspin, and obviously sold off quite considerably. Although we have tried to come back, we are now back into this 200 MA resistance, which should certainly hold. The gap level is just above, which, from my perspective, tax inversion concerns will certainly keep a lid on this. Okay, and this is obviously going lower, and going lower quite considerably. With regards to background. Okay, so that's those two sectors, retail and obviously pharmaceutical sector, doesn't bode well for the FTSE. Let's have a look at the mining stocks. The mining stocks seem to potentially be putting in a bottom. That's based on the fact that the US dollar index is at double top. If obviously a dollar index starts to make a new high, then watch out. That'll be a concern. Okay, and given the fact that the FTSE itself is heavily weighted towards commodities and commodities obviously itself, oil and gas, obviously, and metals, it will obviously bode well for the FTSE itself as well. So just bear that in mind. So that's a conundrum. Okay, although retail and pharmaceutical sector is weak, the commodities should certainly catch a bid, given the fact that you've got a potential double top in the US dollar index. Again, it's very subjective. We'll take it there as it comes. But given the fact that there's no economic demand there, demand slowing in China, demand slowing everywhere globally, the European data obviously was pretty poor. Okay, and especially with the fact that there's no QE as of yet, even though Mr. Schäuble is obviously opposing QE in Germany, and is not happy with the current situation with regards to the ABS program. Okay, so and given the fact that the euro itself has plunged to such lows, and yet the European stocks have failed to rally quite considerably, that's a cause for concern as well. So just bear that in mind. Okay, there's a lot of factors. Again, I'll try and elaborate on the European market separately and give you an insight with regards to that. Okay, so the pharmaceuticals I've covered. Mining sector, like I've explained, there is certainly a probability that we can have a double bottom scenario here, and obviously the market start to propel. This double bottom obviously coincides with the US dollar double top. If I bring up the US dollar chart again, as you can see, double top resistance. Okay, so that itself coincides with that. So watch out for that. Okay, there is another chart on the UUP, which I can show you. As you can see here, UUP into diagonal trendline resistance. So it's just an ETF that tracks the US dollar index, and that, as you can see, is into the key level there, or key resistance zone. So it'll be interesting as to what happens come Monday. Okie dokie, right. So going back to the fundamentals. Okay, so we have Situation in Iraq concerns geopolitics. That's going to away. We have Mr. Carney being hawkish. That's going to weigh. We've got Tesco and the pharmaceutical sector, so retails and pharmaceuticals, obviously that will weigh. The only sector really that's doing well at the moment is really the housing sector, because of the economic data that's coming out and supporting that. So that's something that we're going to keep an eye out as well. Okay, let's just bring up the chart of the building and construction. And building and construction, like I said, given the fact that the economic data supported that, certainly a potential here for a reversal and move higher, especially in the 10-day. I mean, this looks as if it's ripe. Really does want to start to reverse here and obviously push higher. So that's going to be interesting. But given the fact that Mr. Carney was hawkish, and obviously that means interest rates are going to rise, then obviously what does that mean? That doesn't bode well for the construction industry, does it? So therefore, down we go. Okay, so just bear that in mind. That's a variable that I'd forgotten about. And obviously a double bottom scenario like 3750 certainly is not out of the equation. Obviously that's negative. So the only thing that's really going to be holding commodities higher next week is going to be a dollar. Obviously dollar holds that double top or resistance level, starts to fall and commodities start to inflate. But given the fact that you got geopolitics in the background anyway, oil will certainly catch a bid regardless. Okay, so it's going to be a key watch in copper. But given the fact that the economic data is so weak and yet copper can't rally given that news flow, then that obviously doesn't bode well either. So there's a lot of conundrums. Okay, that's why I run the live analysis service, because I give my insight in real time with regards to all these variables. As you can appreciate, the amount of variables I'm currently observing, there's many more. And from an intermarket analysis perspective, that's why it was very hard to actually trade this week, because you had Aussie and Kiwi going lower due to central bank jawboning. Call it what you want. Okay, obviously the Kiwi was certainly jawbone, but the Aussie itself was still open to debate. Okay, but the Aussie started certainly sliding lower, and obviously that doesn't go in concert with the fact that gold and oil are going higher, and that's mainly due to geopolitical concerns. Okay, that's basically a situation scenario that we find ourselves in. Okay, so let's just see exactly what we can interpret from that, and let's see exactly where the market's positioned from a technical perspective. Okay, right. So if I go to my chart of the FTSE 100, okay, so FTSE 100, obviously we've had this H&S formation which I've highlighted a few times. Obviously the target was 6550. We went as low as 6513, which is quite substantial, and the market obviously reversed and pushed higher. So it's all about whether or not this market will reverse to the upside, okay, or whether or not this will be another bear flag and we're going down to 6560. That's the next stop on the FTSE 100. My gut instinct in the moment is saying that we may well test 6560 next week, but again, open to multiple interpretation, and the market's constantly shifting its bias regardless of what me and you think. Okay, that's part and parcel of trading. Right, so bear that in mind. This trend line that's coming up from below, connecting those wicks together, gives me this wick here, potential here for a potential short squeeze rally bounce. Okay, upside will be limited to the 6675 level and 6690 level or 6706 level. So we'll see exactly how that plays out. Okay, so the next one is the FTSE 250. Okay, FTSE 250, as you can see, we are into horizontal support, a bottoming tail scenario. Okay, on the FTSE itself. So one would argue, based on that information, that we are looking to potentially gap higher, and for the FTSE to certainly rally. Okay, so again, that's an argument for the bullish side. Now I also check cross-reference my trades with the FTSE AIM All Share, which is small caps. So if the small caps are doing good, then the FTSE generally tends to do good. It's just a measure of sentiment, really. And you can see here that we did have the failed inverted head and shoulders pattern. That's why we've sold off quite substantially. And now we're into this key support zone as we speak. If that obviously gives the FTSE 250, FTSE 100 both, good night to them, and obviously they'll still go into free fall. So, again, potential there. So overall, if I look at the three indices, I can certainly argue, yes, we are into this potential support, and that's basically what we're going to be expecting from that perspective. Okay, so that's basically what we're doing. Okay, so give me 1 second. Okie dokie, right. So let's bring up the FTSE 100 now. Okay, on the smaller time frame. Okie dokie, right. So the FTSE 100 remains into lower lows and lower highs. Okay, there is a gap that needs to be filled below at this level here at 6570. So again, watch out for that 6570, which corresponds to the daily chart. We are into previous support equals resistance. We're into the 50% Fibonacci retracement around that region, and obviously the market's remaining in a period of lower lows and lower highs until proven guilty. So I'll certainly be going short. Well, I open up shorts on Friday, so I'll be certainly going short Monday. That's my bias, okay, and especially with regards to the FTSE itself. Okay, so that's the bias with regards to lower lows and lower highs, and we know the resistance zones. Obviously, the market blasts higher, creates a short squeeze, and we're at 6730. Otherwise, you've got 700, and obviously, if the market holds this previous support equals resistance line here around the 660 level, and then obviously Fibonacci at 50%, etc., etc. Okay, let's have a look at a 10-minute chart. 10-minute chart. Okay, so obviously we've broken this key trend line resistance. We've made this inverted head and shoulders. We've hit the target on the inverted head and shoulder. Almost hit the target after hours at 6675. So 6675 is a good place to short this market. Okay, anywhere around this region. Obviously I'm long, but when it comes to the markets themselves, I'll certainly look to obviously close out, look at it from that perspective. So yeah, so always bear that in mind. So you had a symmetrical wedge breakout, obviously higher highs and higher lows for now, and the inverted head and shoulders target is 6675. Okay, and that's basically it, folks. So 6675 is resistance. Obviously the one above that was 6690, and then obviously the one above that will be 6720. So again, we take every day as it comes, every hour as it comes, every 10 minutes as it comes, every 2 minutes as it comes, even 1 minute now. People are trading off a 1 minute chart as it comes. So the onus is really on the so that's basically what we're observing. Okay, so you've got the resistance zones and the resistance levels, okay, at play. So risk on, risk off, wax on, wax off. Goodbye now.